Everybody, welcome to today's video. I'm really excited to share this information with you today because this is going to blow your mind. I'm going to share with you how to take money out of your corporation without paying 1 penny in personal income tax. I'm telling you, it's going to blow your mind. Now, I've shared this information in another video on my channel, but it's like an hour and 20-minute video, and you probably couldn't stick around that long. So I'm going to pull that information out and I'm going to share this with you in like 8 or 10 minutes. So stick around to the end because the result of this strategy is I'm going to share it at the very end of the video, and it's going to blow your mind. Okay, specifically, we're going to share with you how to take $1 million and transform it into $3 million personally into your hands tax-free. I'll say that one more time. We're going to take $1 million from your corporation and put it in your hands personally, and you're not going to pay 1 penny in tax, and I'm going to multiply it. You're going to end up having $3 million. Now, I know you're probably saying, I don't believe it. Well, neither does this guy.
No, I don't believe it.
So this is, you can see that I'm excited to share this with you because when I first learned this strategy and I said, really? A business owner can do this? And I'm surprised that a lot of business owners aren't aware of this. And I understood why after a while. And that is because everybody goes to the bank, deals with their bank, with their corporate bank account, and they talk to somebody at the bank and they talk to them about different investments. But at a bank, they're not allowed to talk to you about life insurance. It's actually prohibited from you for them doing that. So you kind of never really hear about it. You only hear about it if you're talking to an advisor who happens to be life licensed. Then I can talk to you about this strategy. So get ready because this is going to blow your mind. Now, if you're new to this channel, well, hi everybody, my name is David. I talk about financial planning, estate planning, retirement planning, insurance products, whether you're an individual, a family, or a business owner. This is the channel that's going to help you figure out how to use your money, how to protect your family. Go to my YouTube channel. There's so many videos, you're going to love it. And the way I present the information is very simple, straightforward, so you shouldn't have any trouble figuring out what am I talking about because I don't make it complicated. It's my philosophy is to be straightforward, very simple, down to earth, and I hope you appreciate it. Okay, let's get into this. You see right here, you've got your corporate cash. So this is money that you're not using in your corporation for operations. This is money that is set aside and you've decided you're going to invest this money. Now, if you're investing this money, you're probably going to have maybe an investment portfolio fixed with mix of stocks and bonds and funds. Maybe you put it in a GIC because you wanted something very secure, something guaranteed. Maybe you're going to need it 3 or 4 months from now. Or maybe you decide 5 years I'll put it in a GIC. I just want to make sure that it's protected. Problem is it's low return. You know that if you're in a GIC. Or you might even just have it in cash. Now, look at this video up here. You're going to know something about this is going to be important for you to understand. And that is having too much cash in your corporation could make it offside for you to use your lifetime capital gains exemption. So that video is good. That's right up here in the corner. That's going to here, I think it'll probably be here, will actually help you to understand what is the lifetime capital gains exemption and how might you be offside as a business owner if you have too much cash in your business. Now, the other problem is in section 1 and 2, if you're investing your money inside of a investment portfolio or GICs and you're earning something from it, you're going to have to pay a passive income tax, and that passive income tax is 53%. So it's a really disadvantaged way of investing your money. So there is a better way. Now, strap yourself in, pay attention here because this is the part that's going to blow your mind. Okay, ready? It's called corporately held life insurance. Now, don't get upset because everybody thinks life insurance is boring, but this is actually going to get you pretty stoked about life insurance. Okay, your company is actually going to take life insurance out on you. And so it's based on your life. And let's say you're 45, and this is the example I'm going to share with you. You could use your own numbers, it's fine, but I'm going to say somebody who's 45 and they're going to retire at age 65, okay? So here you are, you're 45 to age 65, you see that on the left, and you're going to deposit, let's just say $50,000. It's a fairly nominal amount for a business. Basically, you don't want more than 20 or 25% of your holdings. That should be kind of like the max, because you want to make sure you're also diversifying into other strategies. But let's say up to 20 or 25% of your cash flow or cash on hand that you would put annually into life insurance. So every year, that's just a rule of thumb, by the way, but every year you're going to take $50,000 and deposit it into your life insurance, okay? And that deposit is going to grow over time. You're going to get a dividend. Right now, the dividend is about 5%. As interest rates go up, typically life insurance companies increase their dividend nominally. And so you should see that dividend values will actually increase over time. But this is your cash value growing over time. And then you also get a death benefit, okay? So that's like a typical life insurance participating whole life insurance policy, okay? Now, at the bottom of the page, age 65. Now, I'm paying particular attention to this because I said you're 45 and you're going to retire at 65. So let's take that number. Look at the bottom of the page. It says cash value is like the same amount of money, almost $1.3 million in cash, okay? So let's blow that page up. Flash forward to age 65 and see what we do with this. At age 65, you're going to be able to go to the bank and say, I've got $1.3 million in cash. I would like to use this as collateral to take a loan out. And that loan is $108,000. So you get to take $108,000 and put that money into your pocket tax-free. You're not going to pay one penny in tax. You don't even have to make interest payments on this. You can collateralize the interest payments, so you never have to pay interest payments, and you never want to pay this back. Okay, this is important. You can if you want, but you're going to understand why you wouldn't want to in a few minutes. But essentially what you're going to do is every year you're just going to go and take a loan for $108,000 every single year. In this case, we're going to go all the way to age 90. You can see here 73 to 90, $108,000 is going to come into your hands every single year, tax-free, without paying one penny in tax. In fact, not just 108, over this 26 years, $2.8 million tax-free is going to flow into your hands personally without paying not even one penny in tax. Now remember where we began. We began with your company's bank, right? Your corporation, and all you did was transfer laterally $50,000 into the life insurance policy every year. It's a nominal amount of money from your corporation that your company isn't going to need. The money was still there. It never disappeared. It grew over time, but this is money you weren't going to use, and you were just being punished to invest it in a traditional way. You allowed that to accumulate over 26 years, 20 years, and then you pulled $2.8 million tax-free out into your hands personally. Can you think of a different way to take money out of your corporation? If you can, put it in the comments because I'd love to hear it. But if you can share with me how you can pull $2.8 million out of your company's bank account tax-free, that would be interesting. But I just shared with you how to do it. And it's the easiest thing you have to do. All you have to do is take life insurance. You don't have to do any crazy fancy investment strategies. It's just life insurance on yourself, fund it every year, wait for it to grow, pull the money out tax-free. Now, let's just flash forward to age 90. You see at the bottom of the page, you've got a death benefit of almost $5 million. So let's say you lived to a beautiful age of 90 and you passed away. Well, what happens is the life insurance pays off the actual loan that you have, and $1 million goes to your beneficiaries tax-free. So not only did you get to pull the $2.8 million out, you also gave $1 million to your beneficiaries tax-free. This is the most remarkable strategy that a business owner can do to pull money out of their corporation. And remember, you're only pulling a fraction of the money out of your corporation because you only took $50,000 of what you probably had was much more in cash there, right? So this is an amazing strategy. Now look at these two guys. This is freedom. Just consider that they did this strategy. They're sitting there. It could be in their backyard, could be in a holiday somewhere. They're totally relaxed. Why? Because their money wasn't invested in the stock market. It's not invested in some kind of fancy strategy that's going to help them to get a favorable return. They don't have to worry about market fluctuations, recessions, any geopolitical events. They don't have to worry about that because it's in life insurance. Life insurance is one of the most conservative ways to invest your money. So they can just sit there and grab $108,000 every single year, tax-free, put it in their pockets, and totally relax. Well, if this is something that appeals to you, here's my contact information. Feel welcome to give me a call or send me an email. You can actually schedule time with me online with my online calendar. I'd love a chance to run some numbers for you so you can figure out, is this something that would work for you? Is this a strategy that could really change your life? Well, we won't know until we actually sit down and talk. We can do it over a Zoom call, telephone call. It's actually very simple to go through with you. But I hope you got a lot out of this. Look at this, 11 minutes. I did this video in 11 minutes. I'm so happy about it, and I think you are too. No longer a 1 hour video for you to figure it out. Well, I hope you enjoyed this video. Thanks for sticking around to the end to see the magic of this strategy. I hope you found it worthwhile. If you did, put some comments below. I want to hear what you say about this because I think it would be interesting for other people to hear what other people think about it as well. If you think anybody needs to see this video, please like and share this video with anyone that ought to be seeing this. Again, thanks very much for your time. I look forward to seeing you in the next video. Take care. Bye-bye.